Welcome to part one of two with James Dewar from Bridge to Bitcoin and Berkshire Bitcoiners, a qualified accountant with 25 years experience who has changed his entire life and investment strategy into Bitcoin over the last 5 or so years. James is going to delve into the whole crypto world and why Bitcoin's different, why he believes it's probably the best investment strategy you can make in the mid-2020s. So, supported by the Mortgage Tribe, thanks very much to them. Let's get into episode 1 of 2 with James of Berkshire Bitcoiners. Welcome to this week's episode of the Investors Corner, kindly supported by Mortgage Tribe this week. It's a special, I'm not going to lie. Andy's been itching all week and we've had to lock Ian out of the room, so this lasts under 2 hours. But we've got James from Berkshire Bitcoiners and Bridge to Bitcoin to talk to us about crypto. We've been looking for a good crypto investor, crypto supporter for a long time to join us on the podcast. We've had a lot of questions from viewers and listeners over crypto, whether it's a good investment, whether it's an investment at all, in fairness. So James, thanks for joining us and agreeing to answer every single question that we've got with incredible levels of patience. We've probably done half an hour off camera already, which we probably should have recorded. We'd have already been done. But I've got a load of questions. Obviously, we know Andy is crypto crazy. He's our crypto guy of the three of us. So I thought I'd just kind of kick off with something that you told me and where we met at an event where you described the difference between Bitcoin and cryptocurrencies, because frankly I had no idea. I just thought it was all the same stuff, an imaginary digital currency that you can never touch, feel or hold. But there is a fundamental difference between what Bitcoin is and what crypto is and what currency is.
Yeah, I'm sure. And great to be with you. Thanks for having me. So I think may have sent you yesterday a little graphic which shows most people's perception of Bitcoin being a kind of circle inside the circle of crypto.
Yeah.
Yeah. And the other thing, which is Bitcoin being its own circle and crypto being a subcircle within the financial system that we currently exist in. And those two things being quite different. It's called perception of Bitcoin as a subset of crypto, and the reality that Bitcoin is an entirely different monetary system, whereas crypto is just a subset of the existing system. And maybe we can put a link to that on the show notes or something.
Yeah, 100%.
Yeah. The perception of reality. So that's the sort of overview picture of it. But essentially, it's about trust. When it comes down, it's about trust. And almost all other crypto other than Bitcoin, you're trusting some group of insiders or some company or some foundation that essentially has a substantial element of control over how that blockchain or that system works. With Bitcoin, it is trustless. There is no CEO of Bitcoin. There's no marketing officer. There's no budget. There's just nothing there. It's just a commodity like gold. In the same way as you can have gold miners or corporations that allow you to invest in gold and will help you with that, maybe like a gold ETF. The gold itself is not a company. It's just a thing.
Yeah.
It's an element that exists in the universe. So gold is like Bitcoin and Apple stock is like crypto. Yeah. There is a company behind Apple. There are people in charge of it. You can buy the shares.
Yeah.
But there's a trust between you as a
people
shareholder.
People can make terrible decisions or good decisions which affect the value of that stock.
Yes. And Bitcoin, there isn't really anyone there. Yeah. It's a decentralized, trustless money.
And that's the mystery to us.
That is it.
To me, in 2 minutes. The mystery of Bitcoin is there is nobody there.
Yeah. That's exactly right.
That's what sort of blows my mind, that there's no central and I don't know whether that's a good thing or a bad thing as just a layperson, to be honest. Like it's like, well, where is it? It's just out there. Like, is it a good? Is that, you obviously portray that as a good thing because, like, Elon Musk can literally crash his own Tesla shares overnight by doing a weird salute at a presidential.
Yeah.
Well, they didn't. The chairs didn't crash, but those sorts of things can happen, right?
Yeah.
You know, you've got an enigmatic leader who can make a bad decision on a certain day and say the wrong thing. Whereas Bitcoin, there is nobody, but there is at the same time. You're kind of like, well, who controls this? Like, is there like a secret overlord wearing a cloak somewhere?
That's probably what puts some people off, right? Is that
that's the mystery behind it.
There's nothing there, so people get scared off by it. I think you've seen what you've seen with Bitcoin is there's no doubt that, you know, it's a great investment to make because you see over the last 12 months it going up by 150%, right?
Yeah.
And you see where it was to where it is now. So no one could ever argue that it's not a great investment, but I think you still get those people out there that don't know enough about it, that there's no team behind it. People assume that things could go wrong tomorrow and you could lose all your money.
Yeah.
When actually, when you look into it and you hear yourself speak about what it is, it's no different to investing in gold or, you know, things like that, which a lot of people do.
Yeah.
So it's just that educational piece. That's why when people say to me, you know, crypto's a scam or Bitcoin's a scam, at some point you'll lose all your money. And those people are out there. I mean, they've put comments on our previous podcasts about it being a scam before. And it's just, well, no, you don't have that educational piece.
But part of crypto is a scam, right?
Absolutely. I think I sent you another. I sent you another link yesterday.
It's absolutely fair to say, like, you can just launch your. We could launch the Investors Corner coin. Tomorrow, and it has no function other than to make me some cash on the day, right?
But yeah, it's only part of it is a scam, though, isn't it? It's not all a scam because you do get coins out there, altcoins or other platforms out there that provide a value to existing problems where actually it's solving world problems that if you invest in it, it's got a purpose to it. You know, cryptocurrency...
Maybe.
Expand on that.
Yeah.
So if you do detailed research on some of the other cryptos, and you come to the conclusion that you just say, then fine. And that's what I mean by maybe.
Yeah.
The question is, how many investors in these coins have actually done that research and understand? Because they're priced in for future use, many of them. It's like investing in a startup business in tech. It could be a great idea. You do your research as a venture capital investor or an angel investor, an accredited investor, and you put some money in, and 9 out of 10 don't succeed. Even when you've done the sort of all your due diligence, you basically have to spread it out and hope that one of them succeeds. The difference with crypto between those two scenarios is that you're an accredited investor when you do that in the normal economy. In crypto, it's open to retail. So the difference is that we don't require that people really know what they're doing. And of course, so that's why I say maybe.
Yeah.
Right? It's if you've done your research and you know what the business case is of this business, you understand who owns it, who controls it, what the risks are. I personally hold no crypto. I only have Bitcoin. Okay. Because for me, if I want to invest in a enterprise, I personally want to benefit from the regulatory environment that says, well, if I invest in this company, there are rules about issuing new shares, right? There are rules about that. There aren't any rules about issuing new coins on any given network. Now, they might be self-imposed rules. They might make a statement, we've got a fixed supply.
Yeah.
We won't do any more. But it's a trust thing. They can't bind themselves to not be able to do that. Bitcoin is bound because of its decentralized nature and because of the game theory that's implicit in its code. So that if you take Bitcoin and you launch avocado Bitcoin, and you say, well, I'm going to make...
ring to it.
Yeah,
I like it.
and you say, well, I'm going to make 22 million. I'm now launching avocado Bitcoin. I've changed the Bitcoin code. The thing is, all of the people around the world who are Bitcoiners like me are not going to run your code on my node. So my node is checking that the miners are following the rules that I want them to follow, which is the rules that every other Bitcoiner have, which has 21 million. I'm not going to pitch in or vote for or change my node to start regarding avocado Bitcoin with 22 million as the real Bitcoin, because it's against my interests as a Bitcoin holder.
Because it would devalue your own asset.
Exactly. It's going to, exactly. It will dilute my holding. So, and just thinking through that game theory, it becomes obvious that, well, no Bitcoiner is going to vote for dilution of their assets.
Yeah, I was trying to describe it and did a very bad job of it last night. Of what you just said is the control is with the people who hold Bitcoin to say whether something is legitimate or not. So it would be almost impossible to issue more or expand it without somehow rounding up a couple of 100,000 random people around the world. You'd have to get their equity in some way, shape or form by giving away an awful lot of the value of it, which in that case would make it not worth doing somehow.
Exactly correct. Exactly. It's just not in...
If you followed, I'll send you a keyring.
The economic incentives and the game theory basically mean it's technically possible to change the code and therefore the supply. But in practice, it's such a vanishingly small probability that you'd ever get agreement to do that. That when, as human beings, we can act or not act, we can't deal with decisions that involve probabilities of 1 in a billion chance that X, Y, or Z will happen. We basically have to go, that's zero.
Yeah.
I mean, otherwise I'm just lost in this sea of tiny probabilities of various things. I've got to make a decision. How am I going to lead my life? Am I going to eat today? What am I going to eat? What time do I get? But the things that you just do, act or not act, are the decisions we make. And when you get vanishingly small probabilities and things, that's basically zero.
Yeah. And I think where people are quick to criticise that as a system, they also don't appreciate that probably right now there's billions of pounds being printed. Which is devaluing their own bank account. So it's happening to them anyway. So you're more protected, if not 1,000% protected, you're more protected than you are by your government, because your government is probably currently quantitative easing the currency out of whatever hole that it's in today.
But it's not just the government. So actually private banks create 80% of the new money in our economy. So as a property company, you'll know you get a mortgage to to buy a house. And that mortgage is effectively money that's introduced into the economy. It's not money that's saved that they've already got. They create the money. So the private banks create money when they create credit. And that money is now new to the economy. It didn't exist before. As I say, it's not the savings of their customers. That's how it used to be years and years ago.
It's just nationwide, isn't it? That is still on a balance sheet.
To my knowledge, every financial institution, I would say every financial institution creates money. Every bank creates money. They have this special ability to do that. It's a privileged position within our economy that they, along with the government, are able to create new money. Basically, if you were running avocado properties and you got that right, you could basically create a liability and an asset and just create your own loan effectively. Give yourself money and create an asset and a liability. And so from a bank's point of view, the asset is the debt that you as the mortgage holder have to them. That's now an asset. And the liability is just something that they've added on their liability side of their balance sheet that reflects a relationship, a special privilege they have in our society to do that, reflects a relationship to the central bank.
Yeah.
But that money is new and introduced into the economy. So 80% of the new money comes from private banks rather than the government. So that's just a interesting point.
Interesting point,
So
isn't it?
I've always sat on the sidelines of this, watching it go up. And I say it to Andy, start of every year, think, oh, I missed the boat on that. And then the next year, oh, I missed the boat on that. And the next year, I missed the boat on that. So more recently, I've been literally put small amounts of money in just to watch and understand and get to know it, almost as a result of doing this podcast, really. With Bitcoin, where does it go next? What is the end game? What is the goal of people who hold Bitcoin in the Bitcoin community? Because I heard a story about an estate agent not far from here who once upon a time held 200 Bitcoins. It doesn't anymore.
Him.
Still working.
Where he sold them or
Yeah. So, you hear these stories, don't you? And the guy who traded 2 Papa Johns for 50 Bitcoin or
10,000. So that was the first recorded transaction.
Yeah.
The first time we could really put a price on it as well.
Yeah.
So it was, I think the dollars, it was 2 pizzas, and I think they were $15 each.
Yeah.
He exchanged 10,000 Bitcoin for $30 worth of pizza. Yeah.
God.
But you divide one into the other and get a price.
Oh my God, what have I done?
So that was May 2010 that happened.
That was 2010. 15 years later, on the exchanges, a Bitcoin's roughly $100,000 as we speak, give or take. Where does this end? Does it end? What does the next 5 or 10 years, or even shorter term, next 2 to 5 years look like for Bitcoin? Is it an adoption across the world? Is it a niche market? Is it just somewhere to hold your money?
So there are a range of different perspectives to answer that question. I'll do it purely from the individual investor's perspective as opposed to the institution or the nation state for the purposes of just answering this question now. So just as an individual. So here's my perspective, and here's my perspective. I've never sold any Bitcoin.
Mm-hmm.
I only ever buy it. It's a saving.
That's a good decision based on the market.
It's a savings vehicle for me and my family. I plan to never sell it. I spend it at stores or pubs or restaurants that take Bitcoin. But usually, almost always on the way home, I will place an order to replace the Bitcoin that I just spent because I'm an accountant, so I keep a fairly tight rein on all our investments and money.
Spreadsheet.
And every Saturday morning I sit down. Yeah, it's a lot of spreadsheets.
I don't know who else, but it doesn't.
Every Saturday morning I sit down and I go through everything. And one of my rules has been for the last 3 years, one thing must not happen, and the amount of Bitcoin that I've got must not fall week on week. So inevitably it goes up over time.
Yeah.
I'm not the only person in the world who's doing this.
Mm-hmm.
There are new people coming to Bitcoin all the time, understanding it, learning about it. And so long as that keeps happening and the supply of Bitcoin keeps falling, because you're probably aware every 4 years the supply halves, so that you get an asymptotic curve to the 21 million. So imagine a 21 million line. It started off 50 coins a block, halved after 4 years to 25, 12 and a half, and today it's 3.125 coins per block. So this curve is coming up. It'll take another 100 years to reach the 21 million. Currently 19.8 million Bitcoin has been mined, so there's only 1.2 million to go over the next 100 years. More people coming in, no ability to respond to demand in supply. The only thing that can respond is price. So for me, whilst there's some volatility, there's some ups and downs in the price, with a medium to long-term time perspective, I can only see one outcome, which is why I never want to have my stack go down.
Yeah. I think what I struggle with and what, or have struggled with, and what the normal person struggles with is it's not a physical.
Yeah.
So if you've got a fistful of money, you know you're doing okay. It's got the Queen's head on it and it's legit and it's there. Whereas, and that's why people invest in property. It's why people always tell me they buy a buy-to-let because it's bricks and mortar.
Yeah.
Like there's nothing more safe than bricks and mortar in your town that you can, it's not going anywhere and it's a commodity.
Yeah.
Bitcoin's obviously a digital commodity. As you've described, there's going to be less and less supply of it, just like there's less and less supply of houses in the right locations, which is what makes the value, in theory, increase over time.
Plus the demand rising.
Absolutely.
Those two things.
Yeah, because there's more and more adoption.
Yeah.
So you've got like a multiplication, I guess, which is why value has gone, like, what do you say, 150% in 12 months, which is, I think there's probably only 2 stocks at the top of the stock market that's matching that.
Yeah.
Really.
And there's a stock that is outperforming by a long way all of those as well. And that's a company in the United States called MicroStrategy, who in 2020 made Bitcoin their primary treasury reserve asset.
Right.
And their stock went up last year over 700%. So, and they're a listed company on NASDAQ. You can buy them in an ISA SIP. And their stated strategy, their metric that Michael Saylor, who's the executive chairman, is running that company to now, is to deliver Bitcoin yield. And he's doing that through the issuance of convertible debt, convertible bonds, new equity into the market. And so as a shareholder, every week, the underlying amount of Bitcoin that I as a shareholder have per share goes up. So imagine you've got the Bitcoin price going up.
Yeah.
You can see the economics of that we just talked about.
Yeah.
But then you've got this entity that's a company where, as a shareholder, the amount of underlying Bitcoin per share that I'm getting goes up every week. And this is so it's not just the Bitcoin itself, it's also there are corporations out there that you can now invest in. Inside tax sheltered investments, which are outperforming even Bitcoin.
That's something that you were saying earlier. Is companies that hold Bitcoin. Obviously, they're doing what they're doing as a business, but they're also multiplying their assets and their profits, because the asset that they hold instead of cash in the bank account is in Bitcoin, which is obviously outpacing cash by a multiple.
I mean, you look at big institutions. You hear in the media about JP Morgan buying X amount of Bitcoin and holding on to that, so they've got an interest in that, and other people adopt it too. I think with Bitcoin, it's the safest bet to put your money in rather than going elsewhere. I mean, at some point, I will transfer all of my earnings that I've earned from the crypto market into Bitcoin, and I will do that. I mean, it's I haven't got life-changing amounts yet. But at some point I will, if the investments that I've decided to make and the route that I want to go down pays off. My goal for investing in crypto is a long-term goal.
Yeah.
So a bit like you when you said that you would never sell your Bitcoin. Well, at some point in the next 10 years, I may sell it because my goal is for a 10-year period. One of the investments that I've got at the moment is XRP.
Yeah.
So I've got 3,000 XRP, managed to buy most of it below $2, probably a month or so ago. Now it's gone up to over $3. So I've made some good money on it.
Yeah.
But for the research that I put into that, and I understand the platform that they offer to big institutions out there, predominantly banks, and the amount of transactions that they can do per second and how cheap that it is, I know at some point banks will adopt that. So I know that, okay, well, it's got to increase at some point. So I'm going to hold on to it. Maybe when it reaches $10, I might think again and say, right, $10, that was my goal. I'm going to pull it out. And I think that's what you've got to do when you're investing in volatile things like this, is have the goal, set your goal. And if it hits that goal, remove yourself from it. Don't try and chase it. I know people that have tried to chase it where it's increased a big percentage and they think that it's going to go up and up and up. Then suddenly the rug's pulled under it, and then it just goes down, down, down.
Mm.
So I think you've got to have that mindset of, no, this is my goal. This is what I want to achieve. Like yourself, it's your savings for you, your family, and you're not going to sort of come away from that. Well, that's what people need to do, especially investing in something like this, because it is volatile. You don't know what's going to happen tomorrow. I find myself waking up at 3:00 in the morning to have a quick look at it, see what it's doing, see whether I need to panic or not. Then I'm looking at it again at 7:00 in the morning. Then I'm looking at it again at lunchtime. So it's like, it does sort of grab you, and you do get enticed by it.
Yeah, you describe your journey with XRP as an investment. So in the technology that you believe banks are going to adopt to make these payments, and that's like buying Apple stock. I think this company is going to do something, and it's exactly that. It is a company. It's Ripple is the company behind XRP.
Yeah.
I mean, there's nothing stopping them, like in any company, issuing new coins. I mean, they might make a statement, but they could always issue new coins. A lot of XRP is held by the founders, by Ripple itself. So many of those coins are not actually tradable in the market, but they could release them to pay for investments in their product, their service. It's effectively a company. Your XRP coins are effectively shares in that enterprise. Yeah. And so your attitude of buying them because you believe in what they're going to do and you think that's going to be successful, it's going to go up in value, depends on two things. One, they succeed. And two, they don't dilute you whilst they do that. Yeah. So that's fine. The question comes, when you've made your investment and you want to cash in, where do you cash in to? It's like, you don't want to hold dollars or pounds.
No. Well, you
so
said you were likely to cash
into Bitcoin.
Yeah.
Exactly.
Yeah.
Because that is money. Right? So the difference between XRP and Bitcoin is XRP is an investment in a shared enterprise, software for banks. Like, we could debate that in detail, but I don't think this is the place for it. Or money. Money's where you put it when you haven't got any investment to make, or where your investment's done well. You cash in some of your gains or all of them, and you put it into money. Yeah, and so that is the exact difference, which is why with money there isn't a term. If you've got good money, there is no term. Like Bitcoin, I'm not in it for 10 years or 20 years. I'm in it forever.
Yeah, it's just mere money. It's a way of thinking almost, isn't it? Business and tax wise, if I hold however many billion XRP Andy's got, and it all goes well, and I convert it to Bitcoin, is there a tax liability there? Or am I still invested in some in crypto in inverted commas?
No, there is. I mean, again, you've got to talk about
your accountant's head back on at that.
Yeah. You've got to talk about which tax regime you're in. So which, are you in the UK? Are you in the US? Are you in Germany or Portugal or Thailand when you make that transaction? And what are the rules in place? So there's a time dimension and a kind of tax domicile dimension to that question. But for today in the UK, yes, capital gains tax liability on the transaction. Of course, you've got an allowance, which has been nicely reduced over the last few years.
Tell me about it. Every business owner and an asset owner watching, listening to this is currently finding the size of their noose. Is the same applicable to Bitcoin in that sense? Because you're saying, well, I own Bitcoin, I work in Bitcoin, I buy my beer in the pub in Bitcoin, and you've got a POS machine on the side table that shows how you can pay for just a normal transaction in Bitcoin if you choose to. I something's in my head, just like the two cables don't connect, that this is taxable somehow, because it's just outside of banking. Like, if your Bitcoin, I guess your money is just worth more than my money. Is that like a stupid statement? Like, because at the start of the year, if I had £100,000 and you had 100,000 Bitcoin, and we both go to the pub now and buy a pint, it's just cost you the equivalent of about £1.50 to my £5.
Yep. So
because like inflation, like the value of your money's just tripled.
Yeah.
Compared to the value of my money is just still 1 to 1, or maybe 1 to 97.5 because of inflation.
Yeah. So there is a theoretical capital gain there. So when I pay for my beer,
yeah,
in theory that should be going on my tax return and subject to
That's what
capital gains tax. But there's two things I think to point out here. One is I have a £3,000 a year capital gains allowance anyway, so it's quite a lot of beer.
Oh yeah.
Two is, my Bitcoin's not 100% profits. There was a basis price. I did pay something to get it, so it's not all of the beer. So maybe I can spend 6,000. If I've doubled my money, maybe I can spend £6,000 in Bitcoin in a year. So that's £500 a month. And effectively, as long as I'm not trading other capital gains items, then I effectively come in and buy that, so I don't have to pay the capital gains tax. So there's that point. The second point is, if you're going to buy a house or a yacht, then you're going to pay capital gains tax. So the answer for that might be, don't bother using Bitcoin to do that yet. Who knows what the tax regime will be in the UK, in the US, in Germany, in Portugal in years to come. Who knows where I'll be living in years to come. Yeah, so there are variables there in the bigger picture over time. But for the day-to-day, spending £500 a month in Bitcoin until Waitrose accept it and Tesco accept it, it's not going to be a problem.
Yeah, at the moment you're finding places almost for the novelty of spending it rather than it being the norm.
Yeah.
Business owners, because there are quite a few who listen, can businesses hold crypto? You just said obviously there's one of the biggest risers in the US stock market. Their commodity is Bitcoin.
Yep.
If as a business we decide rather than holding pounds cash, can we just hold Bitcoin instead?
Yes.
It sit on the balance sheet.
Yes.
As such.
It sits on the balance sheet as an intangible asset at that cost. Clearly, as it has over time rises in price, if you execute on that, then there'll be corporation tax to pay on the gains. Of course, if the business is making a loss, it would offset losses as well. So, there's a little bit of additional security in there. But as has often been said, the only thing worse than not paying tax than paying tax is not paying taxes, because it means it loses.
Funny. I always had that feeling about capital gains when I've sold a property over the years, is I'll pay it with a wry smile on my face, knowing that it's only a small percentage once I've written. Obviously, it's not as good as it used to be, but it's only a small percentage of what I've actually made. So I'm paying that check over because I've done all right.
Yeah.